Sure. Welcome to the Rigatoni Capital Substack. I'm here with my co-host Kevin, also known as Bagholder on Substack. And this is the halftime report show, like CNBC. We're coming to you at 12:20 p.m. East Coast time. How you doing, Kevin?
I'm outstanding, sir. Yourself?
Great.
Good to
Thanks for
hear.
joining me. Thanks for joining me. Let's share the screen and go over just for 2 minutes. I'm going to be really super quick here because I don't think people want to hear me talk, to be honest. I don't like to hear myself talk. Um, so I have Bitcoin is on a tear this morning. We're up 91 and a half. I think gold and silver both kind of just pulled back slightly. They're flat. Actually, I don't know what silver's doing. Maybe you
I think
do.
it's flat.
Flat today. Um, I think people bought the dip overnight. I think people were concerned about December rate hikes in Japan and the Bank of Japan, if they're going to hike or not. You know, how much of an influence that will have on the carry trade, we don't know. We know Bitcoin got liquidated, when Japan interest rates spiked like they did on that news. And, that's pretty normal. We went through this in 2021. I don't think it's going to be as steep. Or I'm sorry, probably, what was it, 2023? We went through that issue with the carry. Was it
Yeah, right
2023?
around there.
Yeah.
Yeah.
Yeah. Okay.
Although this time I think the interest rates are a little higher,
hmm
and so it could spook some people. It's entirely possible.
Yeah, I completely agree with you. I'm not trying to claim I know what's going to happen. All I know is I'm staying invested and I'm buying Bitcoin here. I'm not selling it. The Nasdaq 100 is almost up is up 0.75% right now. Um, the S&P is also up. Looks like we really came from a bottom here, huh?
Yeah.
Um, This was, what date was this? This was only November 21st. And we've had such a big bounce, 10-year is 4.10 today, and the VIX is under 20. We're at six, almost 16.96 here on the VIX. And, you know, because Bitcoin is up, MicroStrategy caught a bid here this morning. These certain hyper growth, profitable tech stocks are doing really well today, like an AppLovin. Nvidia finally kind of bounced from the Google Gemini, OpenAI ecosystem economy scares. And Looks like we have a risk, we have value stocks not doing too well. And That's about it. So I'm going to start off by pulling up one of the charts that you sent me this morning, just now. I believe this is MSTR.
Yeah. Pull up the other one if you would. Leave that one for second.
All right.
Okay. This is a candlestick chart of Agnico, a one of the largest gold miners around. Solid company. They make money. They pull gold out of the ground at minimal cost. And as you can see, it's this about a 5 year chart. And one of the things that I wanted to discuss is I've always been a candlestick type of guy, and this is a candlestick chart. And there's a certain formation that I tend to look at, and they're very, very rare to find. This particular chart has a good one right in the very middle. Um, you see what's called a hammer. Now that's going to be in October of 23. It's basically the middle chart. You see a little green. Um, yeah, there we go. Zoom out to October. You can see right in the middle. Uh,
Right
yeah,
here.
yep, that one, that guy right there. Um, so basically, what that shows. is there's six things that have to take place to make that formation. The first one is it has to be preceded by a somewhat long downtrend. As you can see, it's that stock had been in a downtrend for about 3 years, so that's there. It gaps down on the open from the day before. You see the candle was red the day before, and the bottom of the body, and there is where it closed that Friday. And the buying pressure was so great that in order for them to balance it at the open, it basically gapped down. It's also on relatively high volume. In fact, if you look at the volume stick on that day, it was the highest it had been in a month. It
Kevin, can you give me the ticker symbol?
Yeah, AEM.
Okay, thank you.
Anyway, the volume was high. The selling pressure was so great that it pushed the stock price to new lows, at which point the sellers became exhausted and the buyers stepped in and they were able to push it all the way back to where it actually finished up for the day. And in fact, that buying pressure was so great that the next day gapped open the other way, going up. So when you see those six elements, a downtrend, a gap down, a high volume, finishing up for the day, a long wick to the downside. I forgot to mention that one. You see the wick on that particular candle is much longer than the body. That's a necessary thing too. It shows that it plumbed new lows and got pushed all the way back. So
Okay.
anyway, you have those six elements, and that's a reversal pattern that when you get all six of those elements, in my experience, it's 85 to 90% likely that that's a long-term bottom.
Are you talking about right here?
Yes,
Okay.
absolutely. And you see that this is the case with Agnico. It was a screaming buy on that day because that formation that you see right there with that candle, it's very rare. You could look on a 5-year chart of Amazon, there isn't one. You could look on a 5-year chart of pretty much any stock you want. They're very rare. And when you see them, it just means that that's highly likely to be a long-term bottom. Now, you could see that was the case here. Had you bought the stock at that time, that thing's done nothing but rip ever since, right?
Mhm.
And the reason that I bring this up is you can now pull up the second chart that I sent you,
Mhm.
um, which is a chart of Mr. MicroStrategy or strategy, as they're now called.
Mhm.
And we look all the way in the lower right corner of that chart. And guess what you
Oh
see?
wow,
You
that's
see it
cool.
preceded by a long downtrend. You see a gap down. You see high volume, and the higher the better. That's the highest volume in a year, right? It ends up finishing up for the day. It has a long wick to the downside, and it gapped up today. Now, again, is this 100% perfect? No. But in my experience, they're between 85 and 90%. They portend that's the bottom for a while. And you can see with Bitcoin ripping back today and the way this chart looks, I think that those, or I think that portends good news for Mr. Shares for at least the next 6 weeks to a couple months. And again, not financial advice or anything like that, but I did buy quite a bit at the close yesterday because I saw the candle that it was making and how rare those are, those candles.
Sure. Now this is a yearly
Yeah, that's a 1 year
time frame,
chart.
and so
So,
is a Nico.
right.
And
Agnico was a 5 year. Okay. And of course,
but
the
it's
longer time frames will bump up that percentage on how accurate they are. It'll put it into the 90s. Whereas something that's a 1 year chart like Mr. is maybe 85 to 90% likely a bottom.
now a
So
Nico looks like it tested the bottom. Almost, it
it did
didn't.
come back and test, which is very often the case. But as you could see, it held and it held on
Yeah.
high volume. And that's an indication that it's going to head up from there, and it did. You could pull up. There's another one which I didn't send you, but if you looked at the SLV chart, and say a 5 year chart on SLV, you could go back to early October of 2023, excuse me, and you could see the same thing for me.
Hmm. Okay, so
Okay.
you
It
want
would
me to
have
put
to
this
be
on
yeah, you'd
candlesticks?
have to look at candlesticks and you'd have to look at a weekly, the 5 year, so that the candlesticks are weekly, but you see the same thing. There it is right by your
Mm-hmm.
cursor. October of 23. Um, yep,
Right here?
there it is right there. Yep.
Mm-hmm.
Spike in volume, gap down, gap up, long wick. I mean, it's all there.
Yeah,
You go back and look at what SLV was then. It's $19, right? This is 2 years ago. What is it today?
sure.
53.
Yep.
That's a
Hmm.
triple. And since it's on a weekly chart, it's highly likely to be accurate. It did come back and test about a month later, and it held on high volume again, and then it was off to the races after that. So this is what I look to get in when I see things that I like long term and they make this formation. I've had a remarkable batting average with it. And again, not 100%, but a very, very high percentage.
What other did you make other trades that worked out well when this happened that we're not discussing? Another.
Well, yeah, like Tesla in May of 2021, same
Hmm.
thing. It's just it gives you an idea when you find a stock you like and you see this formation. Like I happen to like MicroStrategy. I've been in it for a couple of years. So when I saw the formation that it was making yesterday, I'm like, man, this is a thing of beauty. I got to get me some more of this. Of
Hmm.
course, I loaded the wagon. Now, again, it's not 100%, but it's a
Hmm.
very high percentage of time. And so it's something to like, especially if you're a Bitcoin bull, which I know you are, and if you're long MicroStrategy, which
Yeah.
I believe you are. It's something good to see. It just portends the next few months in MicroStrategy should be good. The bottom should be in for a while. Maybe it comes back and tests, and if that test holds on high volume, it could be off to the races after that.
Did you
Of
own
course,
MSTR before this?
yeah, I've owned
You had a position?
MSTR for off and on for about 4 years.
Oh, wow.
Um, the wife actually bought it before I did. She's actually killing it in this stock.
Yeah.
I bought the bulk of what I have. I bought in like late 2023. Um,
Okay.
and I've bought it again. I bought some in the 300s in the past 6 months. So
Sure.
it's not like I'm an expert on it. I did buy. I should have
Oh, I
waited and
did
got it
too.
down here at 184, but you never know. I mean, I've been adding to it and adding to it and adding to it because I think it's going to do well. It's going to outperform Bitcoin. And when, Bitcoin is in a little bit of a, maybe a bear market right now. I don't know if you're qualified as a bear, but it's certainly pulled back considerably.
I would, based
Yeah,
on sentiment.
yeah, sentiment is horrid. And so of course you're getting a pullback that's exaggerated in Mister as well. And I knew that somewhere in here it was going to be a screaming buy. And yesterday we got the little hammer chart, the hammer candlestick that I like. And
Hmm.
so I think that could really do well going forward. I truly do.
Sure. Yeah.
Some other Mr. News too. He just came out and announced yesterday. I don't know if you saw, but they are creating a cash reserve.
By
Uh,
diluting my shares,
what's
our
that?
shares. By diluting our shares, they are starting a cash reserve.
Well, he's not. He didn't sell any shares for this.
Oh, I thought he did.
No, he didn't. He took some of the money that he got from one of the preferreds
Gotcha.
and set aside 1.5 billion, which is if you go to strategy.com and you can
Yeah,
look.
it's 1.44, I believe.
Yeah, he set aside 1.44 billion, which if you go to
Hmm.
strategy.com and look at his website there, you could see that's enough to pay yeah, lower right corner, US dollars months of dividend coverage. That's 21 years of coverage they have in cash sitting
I,
there that are going
you
to be
sure it's not
specifically
21
for that.
months? You mean
What's that?
21 you mean 21 months?
Yeah, US dollar 21 months of dividend coverage. So they have enough cash on hand to service all their dividends for the next almost 2 years, right?
Yep.
And then on top of that, if you look one number to the left, they have 74 years worth of coverage if they had to sell any of their Bitcoin at these levels, which they don't because
Hmm.
they obviously have enough to cover all their dividends. Um, what's intriguing to me about that is if you click on STRC uh, right there, yep, perfect. You can see the dividend on that is that's 11% is their effective yield on buying that right now. So they've got 70 years worth of, backing if they need to pay the dividend that long. But you can get
Hmm.
11% on that right now, and there's no tax bill that comes with it because it's not considered qualified dividends. It's considered return of capital. I did check this with another accountant, so I've checked with two different accountants now. It is considered return of capital and therefore is not taxed. Now, there may be a tax bill when you go to get out of the STRC. You might have a capital gain on it, but in the meantime, you collect 11% with no tax bill. Where else can you get something like that?
Do you know if
And
I can buy this on Schwab, or is it only
no, it's on
certain?
Schwab. And again, in the interest of full disclosure, I have a ton of this. I have all my cash instead of sitting in a money market. I have it in this in STRC.
How's it
Why? Because it's
performing?
paying 11% with no tax.
How's it performing value-wise?
Well, it's not a stock in the sense of what you think it is. It trades like a stock and you buy
Oh,
it
that's
like a
right. It
stock.
only go right. The preferreds are only like a $5 range between what, 90 and 100 or
Right.
95 and right? Okay.
So this particular one, they want to peg it at 100. That's their goal. If morale wasn't so horrid right now, it wouldn't be in the 97s. It would be between 99 and 100. When it peaks its head over 100, they're going to ATM it and sell it back down to 100. If it stays below, say, 98, they're going to raise the dividend, which they've done three times. When they started this a few months ago, the dividend was 10%. They then jacked it up to 10 and a quarter, 10 and a half, and now it's at 10 and three quarters. And they're doing that because the higher they raise the yield, it should incentivize people to go buy it and drive the price back to 100. They want to keep this pegged at 100.
Sure.
And so it's like a money market. When you buy a money market that right now I think yields, well, I don't know, what do they pay, 4% or something like that? You put
Sure.
$1,000 into it, you collect the 4% as long as you want, and when you decide to, you can yank your $1,000 is still there. You yank it out. Okay. In essence, that's what he's trying to do with this STRC. He wants to peg it at 100 and keep the price between 99 and 100 so that if and when you go to take it out, you get your money back. In the meantime, you're getting double digit yields with no tax bill.
And
So
how are they paying the dividends? Like, where's this
they're
cash
paying it
coming from?
monthly.
How, yeah, that I understand, but where is this cash coming from strategy? Where do they get this cash from? Not assuming it's not from their IT or their actual IT business, you know.
Right. If
Um,
you go back and click on Mr. there, back to the left, you can see that as of yesterday, they have 1.44 billion set aside to
mhm.
cover those dividends.
But
Now,
how were
I
they paying it
suspect,
without the cash reserves?
yes, I suspect that as they tap more of the preferreds, they're going to put the lion's share of it into Bitcoin, but they're going to continue to keep that reserve at a level that keeps people from worrying about the fact that they're going to run out of money. Because if you look at this, they have enough to pay for the next 2 years. It's already set aside. And so there's not a lot to worry about. But if you looked on Twitter or you looked on X, there's a lot of people going, oh, he's not going to be able to pay the dividends. They're going to have
They
to
don't
start
know what they're
selling
talking
Bitcoin.
about.
Right, exactly. And this is what shows that. And this is issued, this whole website is put up by the company. So you can pretty much rely on what they're saying. They're not going to go out there and lie to the public. They're a publicly owned company that gets audited. So I'm sure these numbers are accurate. And
Yeah.
anyway, that's um, something that I think that is worth keeping an eye on because now not only are they building the BTC reserve, I suspect they'll be building the cash reserve going forward because the dividends that they're going to have to pay, the more preferreds they issue, is going to continue to go up. So I think they'll be building their dollar reserves and I think they'll be building their Bitcoin reserves. just something to keep an eye on for if you're a Mr. investor.
Sure. Do we see what their average cost in Bitcoin is on this page?
No, I think if you go to the assets, click on assets, I think it's in there.
Hmm.
Um, nope, nope.
Okay.
Try purchases. Maybe it's on purchases.
There you go.
Yeah,
Average
there you go.
cost is
That
74K. Yeah.
right. Average Bitcoin cost 74K. Yeah, and they've got 650. That's a track record of every time they've ever bought, how much they bought. The other column that's interesting there is their BTC yield. Basically, they've grown BTC per share by almost 25% this year.
Hmm.
That's a staggering amount when you consider the performance of BTC has been flat to down all year. So if you had just held Bitcoin, you're flat or down. And Mr. Meanwhile, the amount of Bitcoin being held, you're actually up 25%.
Yeah.
So not a bad deal.
Yeah.
Um, anyway, something to keep an eye on. This website here is truly fascinating, the wealth of information they have on it. Um, and you can get information on each one of their preferreds, STRC, STRK, STRD, whatever your choice is. They all have their merits. Um, STR or STRC, like I said, stretch, that's probably my favorite. Um, Worth
Okay.
keeping an eye on. Yeah, 11% yield. Where else are you going to get that?
Yeah. Yeah. For preferred, I don't know. I have no idea. I'm just still a little confused on how they were paying it before the cash reserve. But they must have cash from
Yeah,
somewhere.
they do. They do. Maybe it's left over from the debt markets. Maybe it's left over from issuance of the preferreds,
Sure.
which, if that's the case and STRC peaks its head above 100, maybe they sell another $1 billion worth or something. They set aside 100 million of that into the dollar reserve and they buy Bitcoin with the other 900 million.
Yeah, I think they were doing that.
And I think that's what they are doing. That's
Yeah,
part of where the cash is coming from.
exactly.
Their software business does spin off some money, but not very much. It's basically a rounding error compared to all this other stuff.
Correct. Yeah. Yeah. Good.
So it's
Well, I hope it does well because I own a lot of it.
yeah, I'm long as well. And like I said, I after seeing that candlestick formation yesterday, I loaded the wagon right at the close. So
Yeah.
anyway, that's about what I had to discuss today about Mister.
Sure.
I'm curious, what do you think of the silver market since we discussed
Well,
that last?
you are famous now because you ha made that famous call.
Yeah.
And I do this other podcast with George and Mike over the on the weekend. And George listens to this show and he says, "Thank you, Rigatoni Capital and Bagholder. You made me a lot of money from silver." He went all in or something.
Mm,
So yeah, now I know that inflation adjusted it actually isn't hitting an all-time high versus the last time, but and gold is hitting an all-time
yeah.
high inflation adjusted, but still, I mean, you would be making a killing right now if anyone that's invested in silver.
Well, that's an indication that it hasn't hit an inflation adjusted high. That's an indication that it's got a lot further to run.
Yeah.
And I'll give you another thing that I follow in that market very closely and have for a long time. Um, Actually, let me give you a little history first. Not a lot of people are aware of this, but back in 1980, the last time silver had hit $50, actually hit it in 2011 too, but back in 1980, the Hunt brothers were trying to corner the silver market, right? And they had driven the price from under $2 up to 50 in the last, like from 76 to 1980, roughly. And they did it by throwing roughly $1 billion, maybe a little bit more at the silver market, which back then was much smaller than it is today. Um, but they were able to drive the price through the roof. And the way that they got stopped was back then, they had margin requirements on futures, and they were buying a lot of the silver on margin.
Of
And the
course they were.
bankers in the exchange didn't like that. So they jacked rates almost without notice. They just got up one day and said, that's it. No more margin. You either have to pony up the money or sell. And if you go back and look at a chart, when they made that announcement in end of January 1980, immediately silver fell from 48 down to in the 20s. I
Mhm.
mean, they just crashed it because the Hunt brothers couldn't come up with the money, right? So the point I'm making with this is when they want to cap the price to the upside, what do? They raise margin requirements. Since now, fast forward to this year, since September of this year, between the gold and the silver market, they have raised margin requirements on those two markets 9 times, including as recently as a week ago. So normally you could go in and put up $5,000 and control $100,000 worth of metal. They're not allowing that anymore. Now it's to the point where you can put up $1 and control $3 worth of metal. Now, they haven't taken all the leverage out of the system, but you can see with the raising of margin requirements that they were trying to cap this rally. And they raised them the most, I think, November 23rd, 21st or 23rd. Don't quote me on that day. I might be the 21st. But that's when they jacked them the most. And what's interesting is this time, it hasn't stopped the rally. It blew right through 50. Now it's gone through 55. Now it's 58. They've been unable to stop it thus far.
Are they also capping the paper ETF like SILV and GLD, or is they just capping the physical asset
Well,
itself?
they're just capping the market that they control, which is where the bankers hold the most sway. You know, like the silver ETF, the bankers don't have a lot of say on that. If you buy $1,000 worth of SLV, they're supposed to have $1,000 worth of physical on hand to cover that. Now, do they? They say they do, and they are a publicly owned company, so they probably do. But the futures market, totally different thing, totally different animal. Okay. They don't have to have the silver on hand, but they can use the futures market because it's a bigger market than the actual physical market for silver. They can use the futures market and sell into it and force the price of physical down. But the problem is that they're building a short position. And when something runs like silver has run in the last few months, if you are short that, you are getting murdered. You're getting killed. Another little piece of history, you go back and look at what Bear Stearns in 2008 when they went under. Why did they go under? Because they had one of the biggest positions in the futures market on silver. And in the first 3 months of 2011, you go look at what silver did. They were losing, Bear Stearns was losing billions. And that's why they went under, was because of their silver short. Right now, the short side of the silver trade on the futures is controlled by a handful of banks, and that would include JP Morgan, HSBC, Bank of America, Scotia, a few others I'm forgetting off the top of my head, but they have massive short positions. I'm talking hundreds of millions of ounces. And every time silver goes up a dollar, they're losing hundreds of millions, right? So,
But it's isn't it also a hedge? They could also be long too.
um, yes. And in fact, what's interesting about this, another piece of history, JP Morgan is probably the largest holder of physical silver in the world. They could use that physical silver to cover their shorts, but they're not going to. And the reason they're not going to is when there is eventually a default on the COMEX, and it's coming, you can see it in the traders' commitments, it's coming. When it does finally happen, the price of physical silver is going to moon. And they have a bunch of physical silver that they've been able to buy the last 20 years because the silver price and the futures, because they've been selling futures to push the price at which physical traded downward so that they didn't have to pay so much to build that physical position. So they do have both, and they could use the physical to cover their short, but it's better to just default, blame it on
Sure.
some rogue trader or whomever, and watch the price of the physical go to the moon, and then they could, dole out their physical to the public who'll be trying to climb in to a market that's so small there's just no room for them.
Yeah.
So all of this portends considerably higher silver prices. Right now, the exchange is trying to cap it with margin increases, and it's not working. So the next step is to try and delay delivery um, any way they can. Which, if you look at it on the LBMA, they were normally settle in T plus three. They're now T plus 60. They want 60 days to be able to settle physical. So, in other words, you have to pay for the silver today, and you should be able to get it in 60 days. In the meantime, you're without the use of your money and you're without the actual physical silver. So, these are the type of
I
games.
lost you. I
Sorry about
lost you
that.
for a minute. It's okay.
No worries. Um, so anyway, these banks are have a short position that they can't get out from underneath, and the exchange is trying to help them by jacking margin rates, but it's not working.
Lost you again.
Oh my computer's not working, huh? We still there? Hello, hello.
Hey, you're back for a minute. You're getting cut you're getting frozen.
Oh, sorry about that. It's probably me. I don't know. Who knows?
Yeah, no, I'm on Wi-Fi. So I don't want to shut it off now because I don't know what that'll do to the.
Yeah. So anyway, to recap, the banks have built a considerable size short position. They can't get out from underneath. The exchange is trying to help them by raising margin requirements, and it's not working. And if you look at a chart of silver, it appears to be broken out, which if you follow charts, it should run for a while, theoretically.
Yeah. Now I can't hear you. I think
Hmm.
now I can hear you.
Wow.
It says my internet connection is unstable. Let me see what's going on here because I we're in the middle of a storm here. Um, shut my Wi-Fi off my phone. Yeah, my we're in the middle of a sleet ice storm, but I don't know if that has something to do with it. Go ahead. I was asking about copper hitting record highs.
Yeah,
Um,
that's another thing that has broken out. And theoretically, above this five level, there's not a lot of resistance, and it could continue to run. One of my favorite stocks that I own a fair amount of is Freeport McMoran, symbol FCX. They're actually an Arizona company, and I live here in Arizona, so I've followed them for decades. But they are one of the biggest copper producers on the planet. Uh, and if copper continues to catch a bid and continues to run higher, that's a stock that could do very well going forward. Um, it's been trading in this 30 to 45 range for years now. And if copper is truly broken out and copper is truly going to run, I think you're going to see a bid in that stock as well. Um, Again, not financial advice, do your own research, but I certainly like it, and I do own some.
yeah, I don't know if you see this. This is a 1 year chart. I got Newmont up 120%. Silver up 89%.
Hmm.
and I like this company called I don't really follow it, but I for some reason it was on my watch list. The Southern Copper Company. Do you know this company out of
I do.
Arizona?
Yeah. I tend to try and stick with the bigger names because they're more liquid. And there's nothing wrong with that company. They do make money and they do produce copper, but I just prefer Freeport.
Sure, yeah. I
Um,
can't believe Southern uh, Copper Corporation is a $110 billion market cap.
I know it's
I
tiny.
mean, yeah, I can't believe that. And let me see here. You got Newmont. Yeah, so FCX was the ticker on that name, and you own
Yeah,
this company?
FCX is Freeport McMoran. Yeah,
You own these guys?
I do, and I've owned them for 15 years, maybe 20, and
Why
I
are these
added to them
companies all out of
recently.
Arizona?
What's that?
Why are all these copper companies out of Arizona?
Well, Arizona is the copper state. I
Okay.
mean, we have lots of mines out here, and if you want to mine for copper in the United States, Arizona's the place to do it.
Okay. Good to know. Um, let me see here if I got anything else for you. Michael Berry is once again short. Um, Michael Berry is once again short Tesla,
Oh, good
and
luck.
he was short Tesla back in what year was this?
If I remember
2021?
right, he got killed on that trade.
Yeah, yeah. Let's see. This says August 2021, so he's trying again. It's just my opinion that I don't care what he does, and I'm happy for the guy if he makes money or whatever. The best part about this is that it's all happening on Substack, you know?
Right. You got a front row
Um,
seat.
yeah, and I mean, think about the volume of people that are downloading this app right now. I'm sure it's big. So that's the biggest news in my opinion. I mean, I could care less what he's trading. So um but yeah, I wanted to also mention this guy is on Joe Duarte. He does he does a daily post on what he's trading, financial markets. And his call here is that once everyone turns bearish, the odds of a market rally increase. Certainly, there are no
True.
guarantees. Yet, if you follow the money, you'll be on the right side of the trade more than often than not. So, when everyone is bearish, as we've seen lately, you've got to be ready for a trend reversal. And again, his name is Joe Duarte on Substack. I'm probably pronouncing his last name wrong, but hey, this is what I have to say is that the Philadelphia Eagles, now's the time to buy. That- I mean, I think we've hit a bottom here for I think we're going to turn it around. So,
Yep.
anything else you would like to discuss before we bounce here?
No, I think that's it. Other than what do you have a gut feel on this Bitcoin rally? I mean, do you think it goes back down there and tests the 80s? Do you think it goes below 80? Or do you think maybe it's all blue sky from here? I mean, what does your gut tell you?
Yeah, I think a lot of this has to do with expectations on the Bank of Japan, to be honest with you, because if there's going to be more liquidation, I don't know how many institutional investors um, borrow at those Japan rates. That's one thing I'm interested in. The second thing is that there seems to be a lot of confusion on what the Fed is going to do in terms of liquidity starting in January. I think everybody says, "Oh, there's going to be QE, there's going to be QE,"
Well, they have
and
stopped
nope,
QT.
they
They
have
they,
stopped QT as of
they
yesterday.
stopped shrinking the
Uh,
balance sheet.
yeah, so they're going
Um,
to have to inject liquidity. It's just not going to be the amount of bond buying that we saw back. 2021, 2022. I mean, those days are over, in my opinion, as of now.
Yeah.
I think for that to ever occur again, to see that kind of QE where they're buying 80 to 140 billion dollars worth of long duration bonds per month, there would have to be some kind of emergency, like something either breaks, there's something on the levels that we haven't seen yet, a war, right? um
Yep.
COVID was a war in a way.
Right. I'll
So
give you another possibility, and that's if silver keeps running, there's some banks, including especially B of A, that's going to need a bailout. And by bailout, I mean north of 100 billion at least.
because they're short.
If and when that becomes news and people become aware of it, they're going to need a bailout. I don't see any world in which the federal government's letting them fold. I
Because they're
just don't.
short so much, they have such a
They're
large
short
short
so much
position.
silver that, like I said, they're hemorrhaging hundreds of millions a day right now. Every time silver goes up a buck, that's another, like I said, it's nine figures of money they're losing. And that's only going to get worse. And silver's at 58. I personally, I do see a world where by the end of next year, silver's north of 80.
Sure.
And if that's the case and you're short this, man, you're going to need help. So it could be the Bank of Japan unwinding the carry trade. Maybe that steps on prices. Um,
I think it's short term, if that does
yeah,
occur.
yeah, it should be. It should be. The only thing is, the rates are a little higher than they were last time this happened. So there's going to be more people incentivized to unwind that, which, if that's their case, that could compress asset prices. But if the Fed is done with QT and there's QE coming at the first sign of that, I think you get a nice rally in asset prices. I do,
Sure.
including the
Yeah.
metals, including stocks, all of it. I think all of it will do well.
Yeah. For the
So,
purpose of the podcast, it's fun to say I think Bitcoin is done selling off, but my whole point of the Rigatoni Capital Substack is like I can't predict this stuff. I'm just a
no,
long-term investor. I think over a long period of time, Bitcoin will be at 160. But don't be surprised if you wake up tomorrow and Bitcoin's at 160. That's the way that
it
this
could
type
also
of
be at
asset's going to
60.
move. And it can also be at 60.
Yeah.
Exactly.
I
Yeah.
my
Yeah.
gut feel says that it's going to have a hard time getting through that 95 level. If it gets through 95 and closes above 100 again, I think we're in good shape. But I think it could find some resistance there, and I think it probably goes back and tests the 80s because markets want to go to where the most pain is caused. And so I don't
That
know.
would
We'll
be, and
see.
that would be healthy,
It would be
That would be
healthy.
healthy.
That's my short-term 2 cents. But long-term, I'm with you. It's going to be 160. The only question is when.
Yeah.
So
Yeah. All
anyway,
right, cool.
appreciate your time there, buddy.
Thank you so much for coming on, and let's do this either when you're away and I'm away, or we'll do it right when you come back that
Yep.
holiday week.
Yep. We'll figure it out. Always good to hear from you, my friend.
Thank you so much. Where can people find you?
I'm on Substack under Bagholder. You can take a look there. I do have a couple more articles be out in the next few days, and we'll see. We'll see where everything
Great.
goes.
Have a great day. Thank
Hey, you
you.
too, man. Take care.